You can't taper a Ponzi scheme, and it's starting to unwind. I think they're at the end game for both the central bank model and the nation state model after 300 years, and Bitcoin will emerge as the global reserve standard. You're talking about squeezing 400 trillion into 21 million units of Bitcoin, right? The price discovery tells you where the price is going, and they can't make any more of it. Primary use case of Bitcoin is separating money from state, and it's as profound a change to society as separating the state from the church, right? That was an amazing leap forward for humanity in a lot of ways, and gave us the Enlightenment.
In today's video, Max Keiser warns that we've reached the endgame for central banks and the nation-state model. He breaks down why the $400 trillion fiat system is unraveling and how Bitcoin is rising to become the new global reserve standard. From his early call at just a few dollars to today's million-dollar predictions, Max explains why everything goes to zero against Bitcoin. He also reveals how Michael Saylor rewrote corporate finance with Bitcoin and why separating money from state will spark a new enlightenment of self-sovereignty. Subscribe now and join our Telegram for exclusive Bitcoin insights and daily market updates. Links below. Let's catch Max in action.
Well, I didn't say 2025. I just said it's in play.
Right.
2.2 million
Thank you for correcting me.
Is in play. It's easy to see where this is going, and so it doesn't seem like a stretch. The total addressable market is 400 trillion. The total addressable, all the fiat money world, it's literally a Ponzi scheme, and you can't taper a Ponzi scheme, and it's starting to unwind. Now there's I believe, an effort that they believe in Washington and elsewhere, they're going to keep this Ponzi scheme going. I think we're at the end game. I think they're at the end game for both the central bank model and the nation state model. After 300 years, I think this is all coming apart. And Bitcoin will emerge as the global reserve standard. And so that means, and everything goes to zero against Bitcoin. So, I think Michael Saylor has a $13 million per Bitcoin prediction out there. And I can see how you can get there, because you're talking about squeezing 400 trillion into 21 million units of Bitcoin, right? The price discovery tells you where the price is going, and they can't make any more of it. So it's not hard to come up with these numbers, and we've been right. I mean, the only really important price prediction I ever made was in 2011 at the first Bitcoin conference in Prague, when Bitcoin was a few dollars. And I said in my speech to the conference that if this works as an asset class and captures 1% or more percent of global Forex, then this is a $100,000 per coin asset. Okay, that's really the only important prediction I think that I made, because obviously if you were riding it from $1 to 100,000, you got the lion's share of gains in this asset. And to give credit, it was also Rick Falkvinge who started the Swedish Pirate Party, who was also at the event, who also did a presentation along these lines as well. So he was really also really seeing the potential of Bitcoin at that time as an asset class and being competitive in the global asset world, where I know as a stockbroker, you have a fiduciary responsibility to at least consider these assets. And if it pops up on your Bloomberg machine, it's going to gain traction, and the market's huge and the price is going to go up. That's it. Well, the primary use case of Bitcoin is separating money from state. So when corporations are buying Bitcoin and you're buying shares in those corporations, you're reuniting money and state. So it's going backwards from the primary mission, right? The vector that it's on is to separate money from state. And it's as profound a change to society as separating the state from the church, right? That was an amazing leap forward for humanity in a lot of ways, and gave us the Enlightenment. And separating money from state is such the stage for something similar to happen to society, a huge leap forward of self-sovereignty, and that would be self-hodling Bitcoin. On the corporate treasury front, you've got a lot of companies with a lot of cash who are buying a lot of Bitcoin. The thing about Michael Saylor is that back in 2020, he had $500 million on the balance sheet, and he could have done what every single CEO in America has been doing for 20 or 30 years, and that is to buy back his own stock. That would boost earnings per share, which would make his stock options go higher, and he could make a lot of money that way. But he took the very bold step of trying something no one had tried before and done before. He put that $500 million into Bitcoin, and he set in motion something that has profoundly changed corporate finance. So the melting ice cube was addressed. He went from the problems with fiat money to Bitcoin. Then the next step was, you know what, I can actually go into the market and sell stock, and I can sell bonds, and I can use the proceeds to buy Bitcoin. So then we went into this idea of dilution equals accretion. Because normally when a company sells stocks or bonds, you're diluting the earnings per share, and therefore the multiple would drop down, and so would the price. So he's saying, no, actually dilution, and with our company, it's accretive because we're going to instantly buy Bitcoin, and Bitcoin is going up forever. So that's the beginning of his at the market stock sales, etc. And stock is looking good. It's getting a lot of attention. Then he goes into another phase, which is these convertible preferreds and other kinds of stock offerings that would appeal to different pockets of money. You know, some are looking for volatility, some are looking for income. And he had the biggest IPO of 2025 so far with one of his spinoffs. And that money is going into the balance sheet, and he's buying Bitcoin. And I think that Michael Saylor is a one-off, just like President Bukele is a one-off. I think that these other companies that have come along that are trying to do what he's doing, they don't think they know what he's doing, but they think they know what they're doing and what he's doing, and they're not necessarily going to be successful at it. And they've already said that if their stock price trades at a discount to their Bitcoin position, they're going to sell their Bitcoin and buy back their stock. So it's going to unwind those positions, where they don't think Michael Saylor and Strategy would ever do that. But these newer companies have already said they would do that. So what you have here is the makings of another blow off top, because you're going to have lots of companies all over the world engaging in this strategy, taking out debt, buying Bitcoin. You're going to see a typical correction of 10 or 15% become a 30, 40, 50% correction because of the unwinding of all these corporate treasury companies. Could be the story of the next pullback. And Saylor himself has said Bitcoin will go from 220 or 250 back to 180. Like, he's already anticipating this. And then the cycle will begin again. This idea that we will no longer, we've broke free of the 4-year cycle, right? We've said that at the top of every 4-year cycle, that we've broke free from the 4-year cycle. And then we have a big drawdown. And people, it's like, oh, why didn't I realize that nothing changes and everything is always the history rhymes over and over and over again. So as a Bitcoiner, I like to see the demand for Bitcoin.
Yeah. And so do you think then retail is investing in things like IBIT, for instance, because it's easier, they don't have to self-custody, or is maybe part of it, if you look at Strategy's stock price since they started acquiring Bitcoin in 2020, I think it's up considerably more than what Bitcoin is itself during that same time period, definitely a higher alpha. Do you think retail kind of tends to go for those seeming higher alpha plays? I mean, that's why we see people invest money at all these quote unquote shit coins and stuff as well? Or do you think mainly people just don't want to custody it because it is still a bit of an intimidating thing to a lot of people?
No, people are just buying numbers on a screen. So, and they like those numbers, and they see the number go up, and they buy the ETF, and they have no conviction. So in a bull market, they'll buy it, and in a bear market, they'll dump it. So they're not conviction buyers. They're just adding liquidity to this big market. And meanwhile, the ETFs are buying a lot of Bitcoin. And I think one of them now has like for like redemption of Bitcoin. So you can actually redeem your ETF for actual
only institutional.
Okay, institutional main chain Bitcoin. So that's like a kind of a step in the right direction. But the idea of self-hodling for these retail buyers and ETFs never crosses their mind.
I think it's important also to note that BlackRock is a good one to look at. Is they have the Bitcoin ETF and the Ethereum ETF, and that you could see that the story of Bitcoin is easy. It's a powerful story. There's no story for Ethereum. What is it? Right. Why? Like, there's no story for any of the other currencies, the coins out there. BlackRock actually just recently said they're not going to offer a Solana or one of the other coins. I don't know. But they're not going to be, or XRP. They're not going to be offering, ETFs for any of those. They're going to stick with, they're sticking with the Bitcoin one, especially. But you could see the volume there. You could see how the work of removing, how ETFs removed the unit bias that you mentioned, because there was a unit bias before. And you saw that back in 2020, 2021, when the last time Bitcoin went up, is the altcoins. People were like, $60,000 Bitcoin, I can't afford 60,000, but I could afford $3,000 Ethereum, right? So they went into the altcoins, and the ones even smaller, the ones $10 or $20, I could afford that. So you saw that in the last round, but the ETFs just destroy the unit bias, because you just know it's like $50, whatever, like it's a $50 a unit there. And without that unit bias, so off the exchanges, like it used to be the exchanges, every single cycle before now was on the exchanges, where the whole unit cost price existed. But on Wall Street, where there's no unit price like that, Bitcoin just trounces the other coins in terms of the ETFs. So that's because it's the only one that has a story that makes sense. That is money. That is digital gold. That is digital treasury. Basically, it's money. It's sound money. It's a layer one money. However you want to put it. It's got a story that is easy for people to understand. And you could see that with remember the excitement of when the ETFs were first happening, and you saw the commercials, and how are they going to pitch this to retail, right? And all of the Bitcoin ETF commercials were powerful and easy and beautiful, some of them, right? Even Coinbase, right? Like, so they keep on putting out these amazing Bitcoin commercials. They never do a commercial about XRP or any of the other tokens that they actually push if you sign up for them. Like, it's like pushing the other tokens, because the exchanges make money on that, right? But the story, the narrative is only in Bitcoin. So that's the only story that matters.
Yeah, I was very interested to hear Tom Lee on CNBC talk about Ethereum, and he's got a price target for Ethereum. And he has no story for that, though. It's like, well, it's going to grab a percentage of Bitcoin's move, right? So there's actually it's no pitch at all. And so now, because it's unit price bias, and it's easy for people to say, well, it's at a lot less than a Bitcoin, it's going to catch up to Bitcoin. So it's CNBC playing their usual game of shooting for the lowest common denominator of their audience, right? They don't have a sophisticated audience, and it's sad to see, but that's how they make their bones. So have at it, boys.
Yeah.
Max reminds us this isn't just about price charts or profits. It's about the end of the fiat era and the birth of a new monetary revolution. As the old system unravels, Bitcoin stands as the bridge to financial sovereignty, separating money from state and returning power to the individual. If you found value in this conversation, make sure to subscribe, like, and share this video so more people wake up to what's coming. And don't forget, join our Telegram community for exclusive insights and daily Bitcoin updates. Links in the description below. Until next time, stay sovereign and keep stacking sats.